Good morning, ladies and gentlemen. In yesterday's video, I gave you the title that the dollar was falling such that gold would be $8,000 and all currencies are falling. So let's extend that thought process to what actually has gold achieved. Because most people, and in America, for instance, in the investment accounts of all investors, gold represents less than 0.5% of people's investments. So you think, yeah, but Mike, gold, it's a bit faddish. It's done well the last few months, years. Well, no, it hasn't. Let's go back to 2000. Okay, let's go back to 2000 because you won't be told this. As I explained to you so many times, you, the public, do not get the truth. You get what they want to sell you, tell you, make money from you from. Okay? It's just a fact. Just a fact. And that's why we've gone through all this background of corporate fascism. You have to understand they're not on your side. They're on their side. So what has gold done since the year 2000? So I go back to the 31st of December 1999 and I find that gold was $289 an ounce. And it's now 3,300 plus, which is an increase of 1,000%. Yeah, but Mike, the S&P, the S&P is booming. It's all-time high, Mike. It's all-time high. Okay, so the S&P, same date, 1469, now 6,300, up 320%. So gold has performed 3 times better than the S&P over the last 25 years. Did you know that? No, of course you don't, because they're not going to tell you. Because they don't make money churning gold, do they? You buy it, you hold it. You buy shares, they can change it. It's called churning. And each time they change your shares in your portfolio, they make money. They make commissions. They get paid backhand. There's all sorts of money to be made. And your return goes down. So even though the S&P is up 320%, I doubt if you've made 320% since the turn of the century. I really doubt it. So we have to go back to the truth again. I'm sorry, it's painful, isn't it? We have to go back to the truth. What is the truth? The truth is gold has increased at over 1,000%, 1,000% in 25 years, while the S&P's gone up 320%. And what are you sold in your portfolio? Gold's risky. No. Exeter's pyramid. It's inverted. Gold is now safe. Shares are risky. Because they're so high. It's not difficult. When they're cheap, fine. But they're now so high. They're all-time highs. So where is the risk-reward ratio on that investment at an all-time high? You say, yeah, well, gold's at an all-time high. But that's why we've gone through all the background, isn't it? That's why we've gone through all this risk that is out there. The currencies, the governments, the politics, China's complete economic implosion. It's becoming more obvious now to me because I can see the sites that are telling me it's collapsed, not collapsing. It has collapsed. You will hear that in maybe a year's time if you listen to the newspapers, old papers. I'm going to bring you 3 particular gentlemen today. There's Rick Rule, and he is fabulous on the gold miners and the investment into the mining industries. He's fabulous. Rick Rule. So I'll bring you a link to Rick Rule and one of his best articles, which I'll put in the description below. And then we have Maneco64. Now I gave you Mario yesterday, and I will link one of Mario talking about what he said was, if all holders of US assets across the world, now we know the dollar's falling, so they know the dollar's falling, if they decide to move just 1/2 of 1% of their dollar assets into gold, because gold appears to be the safety play, then gold will be $6,000 an ounce. Are they going to move just 1/2 of 1%? I don't think so. We've already seen China disposing of some of its US bonds, government bonds, but then why are they doing that? They need the cash, don't they? Are they choosing to invest it in gold? Well, they are, because their central bank's buying gold every month, has done for the last 5 months. So China is buying gold. It's selling treasuries, buying gold. That is that move of out of traditional government bond safety into new gold safety. So I want to explain to you today something called operational leverage, because this is very important in trying to, when you're trying to build a gold portfolio, you don't just buy gold. You might choose to buy gold stocks, which I chose to do. As I've told you, I chose to buy gold and silver stocks. And I did so because of what's called operational leverage. And what that means is when you start to see a move of a commodity like gold, you know that the producers of gold are going to do ever so well. In other words, they're going to outperform the rest of the index because their underlying product is growing at such a high speed in terms of value. Okay, now what you have to realise is there is something called the all-in sustainable costs, AISC, of producing an ounce of gold. And if we take my favourite company, Agnico Eagle Mines, doesn't mean you've invested in that. You have to do your research. Goodness me, take a bit of time. Okay, but if we take their all-in sustainable costs, it's $1,215 an ounce. So if you imagine the gold price at 3,000, okay, and it goes up to 5,000. What is the value increase in gold? Well, it's 60% from 3,000 to 5,000. What is the value investment in Agnico Eagle's profits? Well, their profits were 2,100, 2,100 if their costs are 1,200. Okay, so their profits were 2,1, but at 5,000 they're making 3,8. So their profits are now 3,8 versus 2,1. It's called leverage. So they make a lot more profit as the price of a metal rises. Okay, so I've chose to go into gold stocks and silver stocks, and the same with Pan American Silver. I've done extremely well. If you look at the year to date, we look at gold, and it's up 33%. Sorry, that's a year. It's up 33%. And if we look at Agnico Eagle, it's up 60%. You see? So it's twice the return because of the operational leverage. Now I'm going to introduce you to Rick Rule. I've said to you that his video is in the description below. Please watch it. Someone said to me the other day, they said, Mike, you know, you take a long time to explain something. And I say, what are you on about? How much do you get paid for working in your job? So say you get a good salary. Say you get 100,000 a year for working 40 hours a week, 50 weeks a year. That's $50 an hour. Okay. How much do you expect to make from making an investment, and how much time do you actually invest in making that decision or doing the research? How much time do you spend? Probably none, do you? You take a phone call from a broker. He tells you he's done all the research and this is the answer and he's going to earn a lot. Oh no, he doesn't say the bit about the commission. He's going to earn a lot. No, he doesn't say that bit about the commission. He just says this is what you should do. And yet only 0.5% of all American investment money is in gold. And as I explained to you, gold has risen, not just this year, not just last year, since 2000, since 31st December 1999, gold has risen 1,000% and the S&P has risen 320%. So why did you not have some of that in your portfolio? Because it doesn't earn them money. That's why. They don't earn money from it. They buy it, they hold it. What's in it for them? Shares they can churn. This is the latest sexy share. This is the latest sexy share. This is the latest sexy share. We need to sell this. We need to change this. We need to do this. Fantastic. Commission, 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 commission. Brilliant. So we're going back to basics because the world is going back. It's going to have to go back to basics. It's going to have to reset. And I've explained, I hope, enough for you to understand why we are going to have to go for a currency, economic, systemic reset. Okay, we're going to have to do it. So what is going to come out of that reset looking better than anything else? Is it shares in Pfizer? I said short those 4 years ago, and goodness me, they've gone down. They're lower now than they were pre-COVID. Moderna hit 420, they're now 33, and that's 33 is a boost. They've had a good run the last 2 days. These things are just fads. okay? But you get sucked in because your portfolio gets changed to take account of the fad, but probably at the end of its life rather than at the beginning. Did you get Moderna at 20? No, you got it at 400. What is it now? 33. Oh, well, we couldn't see that. Yeah, we can. We saw it. I saw it. I talked to clients about Pfizer and Moderna and said they're the best shorts in the market. Because eventually, really, it could be that Pfizer goes to zero. It's interesting that the chairman of Pfizer, the CEO, Alfred Bourla, who's fated on the world stage, who everyone, WEF, he's there, centre stage. His share price is down 30% since 2019 in this boom of the S&P, and he's still got a job. Why? Why has he still got a job? Why? Can you believe it? Yes, you can. So we're going to talk more about this because it's a huge subject and we've already passed our time for today, I'm being told. Okay, so we're going to come back to this, but this is just the introduction of what we can do in markets that you will not get shown by your investment advisor because it doesn't suit the commission, the textbook. Doesn't suit it. Why? They don't make money from it. It's just as simple as that. Simple as that. And all they do is label it risky. It's rather like labelling anyone who thinks critically far right. It's easy to label, but it's not the truth. We come back to that word, truth. We start from the truth. Okay, there's a lot more I wanted to say today, but I've run out of time. So what I'll do is I will drop the Rick Rule link in the description below. I will probably drop a Maneco64 in as well. These are the names you need to follow. Greg Mannarino, Maneco64, Andy Sheckman of Miles Franklin, and Rick Rule. You need to follow these people because these people are disinterested in profits from what they say. They're comfortable enough to know that they just want to tell the truth. They don't need to sell anything. Every institution out there, from top to bottom, is selling. That's their MO. And that's all they can do. Okay? So please, there's a lot in this video. There's a lot more to come because I've only covered about a quarter of my 2 pages of notes. So we'll come back tomorrow and we'll continue this journey through gold and silver investment, or rather investments that are not going to be punished by the weakness of all the currencies that we are now living through. Okay, thank you very much and I'll see you tomorrow.